Cryptocurrencies were once the darling of investors, especially those who believed in decentralization and the idea of creating a currency that was not beholden to any central authority. Bitcoin, the first and most popular cryptocurrency, rose from being worth mere cents in 2010 to nearly $20,000 in 2017. The cryptocurrency market as a whole, known as the crypto market, reached a total market cap of over $800 billion in January 2018. However, since then, the crypto market has experienced a significant downturn. As of May 2023, the total market cap of all cryptocurrencies is around $1.5 trillion, which is less than half of what it was in 2018. Many investors who jumped on the crypto bandwagon in 2017 have since lost significant amounts of money, leading some to wonder if crypto will ever recover. In this article, we will explore the reasons behind the crypto market's decline, the factors that could contribute to its recovery, and the challenges that must be overcome for crypto to regain its former glory. Reasons behind the crypto market's decline. The crypto market's decline can be attributed to several factors. One of the primary reasons is the regulatory crackdown on cryptocurrencies by governments around the world. Many countries, including China, India, and South Korea, have banned or restricted the use of cryptocurrencies, citing concerns over money laundering, fraud, and their potential use in illegal activities. Another reason for the decline in the crypto market is the burst of the crypto bubble in 2017. The price of Bitcoin and other cryptocurrencies rose rapidly, leading to a speculative frenzy that was not based on any fundamentals. As the bubble burst, the value of cryptocurrencies plummeted, and many investors lost their money. Additionally, the lack of mass adoption of cryptocurrencies has also contributed to the market's decline. Despite the growing number of merchants and businesses accepting cryptocurrencies as payment, they are still not widely used in everyday transactions. This lack of use as a medium of exchange has hindered the growth of the crypto market, factors that could contribute to crypto's recovery. Despite the challenges facing the crypto market, several factors could contribute to its recovery. One of the most significant factors is the increasing institutional adoption of cryptocurrencies. Several major financial institutions, including J.P. Morgan, Goldman Sachs, and Fidelity, have begun offering cryptocurrency-related services to their clients. This institutional adoption could help legitimize cryptocurrencies and make them more widely accepted. Another factor that could contribute to crypto's recovery is the increasing use of cryptocurrencies in emerging markets. Countries with unstable economies and currencies, such as Venezuela and Zimbabwe, have seen a surge in the use of cryptocurrencies as a way to protect their wealth. As more people in emerging markets turn to cryptocurrencies, the demand for them could increase, driving up their value. Finally, the development of new use cases for cryptocurrencies could also contribute to their recovery. For example, cryptocurrencies could be used to facilitate cross-border payments, which are currently slow and expensive. Cryptocurrencies could also be used in the creation of decentralized applications, dApps, that could disrupt traditional industries. Challenges that must be overcome for crypto to recover. While the factors mentioned above could contribute to the recovery of the crypto market, there are still several challenges that must be overcome. One of the most significant challenges is the lack of regulation. While some countries have embraced cryptocurrencies, others have banned or restricted their use. The lack of clear regulatory guidelines has created uncertainty, which has hindered the growth of the crypto market. Another challenge facing the crypto market is scalability. Currently, most cryptocurrencies are based on blockchain technology, which has limitations in terms of scalability. As more people use cryptocurrencies, the blockchain network can become congested, leading to slower transaction times and higher fees. To overcome this challenge, developers are exploring new technologies such as sharding and sidechains, which could increase the capacity of blockchain networks. Security is also a major challenge facing the crypto market. The decentralized nature of cryptocurrencies means that there is no central authority to oversee their security. As a result, cryptocurrencies are vulnerable to hacking and fraud. Several high-profile hacks have occurred in the crypto market, leading to the loss of millions of dollars worth of cryptocurrencies. To overcome this challenge, developers are exploring new security measures, such as multi-signature wallets and biometric authentication. Finally, the lack of widespread adoption of cryptocurrencies as a medium of exchange is a significant challenge. For cryptocurrencies to achieve mass adoption, they must be widely accepted by merchants and businesses. However, many merchants are hesitant to accept cryptocurrencies due to their. In conclusion, the question of whether crypto will ever recover is a complex one. While the crypto market has experienced a significant downturn, several factors could contribute to its recovery, including institutional adoption, increased use in emerging markets, and the development of new use cases. However, several challenges must be overcome, including regulatory uncertainty, scalability, security, and the lack of widespread adoption as a medium of exchange. While the future of the crypto market is uncertain, one thing is clear: cryptocurrencies have disrupted traditional finance and have the potential to transform industries in ways we have yet to imagine.